There is a commercial real estate fire sale happening in the city of San Francisco right now, folks, and coming soon to a bank or a pension near you. Tens of millions, maybe even hundreds of millions of dollars in losses on the sale of each and every single office tower in the whole city of San Francisco. And San Fran is not alone here. What's happening in San Francisco right now will happen in virtually every single major metropolitan area in the United States, as the mother of all asset bubbles caused by decades of zero interest rate policy combines with the work from home and remote work phenomenon, and that combines with the Fed's interest rate tightening cycle to create a perfect storm of money burning chaos starting right now in the city of San Francisco. What's up, guys? I'm Nobody Special, and check this one out here in globestreet.com. Fire sale on San Francisco office buildings continues. 2 more buildings list for half of what they previously fetched. And I just want to add a little emphasis that they are only listing for half of what they previously fetched. These things haven't even sold yet. Now, this article on Globe Street touches on 4 specific properties in the city of San Francisco. And as you're looking at these numbers, keep in mind that these things sit as assets on the balance sheets of either banks that are already struggling with solvency issues because of unrealized losses from things like U.S. Treasuries and bonds, but they're also sitting on the balance sheets of pension funds. Don't think this is just a they problem. This is very much a you problem. This stuff is sitting in your retirement accounts. We're not prepared to call it a doom cycle yet, but that's the term some analysts are beginning to attach to downtown San Francisco, where a fire sale of office towers has begun to accelerate in the hollowed out city center. 2 more downtown office properties have been listed this month with pricing that reflects collapsing office valuations in San Francisco. First up is this little beauty, 123 Townsend Street. Now, this is actually one of the few buildings in the whole city to survive the great earthquake of 1906, but it may not survive the great earthquake of Jerome Powell in his rate hikes. This building was bought just 3 years ago by CBRE investment managers for $140 million. And now, just 3 years later, they've put this on the market for $90 million. Now, keep in mind, this thing hasn't even sold yet. The asking price alone is $90 million, down from $140 million just 3 years ago. This building is currently owned by a fund managed by CBRE investment managers, which markets to pension funds, which means when this building finally sells for somewhere around $90 million, they hope all of those losses will be realized by pension funds. This is sitting in people's retirements. This is teachers, county, state workers. This is not some wealthy Wall Streeter that's going to get wiped out when this building sells. This is going to add to the funding stresses in America's pension plans. By the way, you think CBRE investment managers losing over $50 million on one building that they bought 3 years ago? You think that might have something to do with this story about CBRE investment manager's CEO departing after just 3 years with the company? That's interesting. This CEO only lasted 3 years, about the same duration as the investment in 123 Townsend Street. And check out this little gem right here. No immediate successor in the CEO role has been identified. So yeah, when the outfit that manages your pension fund's investment money, the CEO just up and quits, and they have no idea who's going to take his place, you'd think that might be something of a red flag there. I just throw them out there. Up next is 60 Spear Street, 157,000 square feet of mostly vacant office space in downtown San Francisco. This building was purchased back in 2014 for $107 million by the Clarion Partners Lion Properties Fund. As in, anybody trying to sell you these properties is probably lying to you. This building was just listed for $55 million. Again, not sold, listed for $55 million. Right around half of what the building was bought for back in 2014. And the Clarion Partners Lion Properties Fund markets almost exclusively to pension funds like the LA County Public Employees Pension Fund or the Illinois State University Pension Funds. Again, when this building sells and takes something like a $50 to $60 million loss, those losses will belong to the people in those pension funds. Oh, and fun facts, you see down here in the corner, you see that little Walgreens sign? Yeah, not there anymore. That one's gone. This is one of the Walgreens that you've probably seen in those Twitter videos of people just walking in like they own the place with a garbage bag, helping themselves to whatever they want and walk out. And you call the cops, and the cops are like, hello, this is the cops. And you say, yeah, I'm being robbed. And the cops say, well, I don't care. Say, well, can't you do anything? And the cop said, no, if they kill somebody, let us know. We'll send a meat wagon. Yeah, go figure. It's a little difficult to do business under those circumstances. That Walgreens, along with every other Walgreens in San Francisco, went bye-bye mid last year. And how about a round of applause for San Francisco Mayor London Breed? Isn't she just doing a bang-up job? Hey, London, love what you've done with the place. Now let's talk about this 22 stories of nope known as 350 California Street in the downtown financial district in San Francisco. This building was first listed for sale in 2020 for $250 million. That's what they listed it for in 2020. They didn't get many bids. They didn't like the bids they got, so they pulled it off the market. Well, they put it back on the market this year, and they finally sold it for $60 million. $250 million in 2020, $60 million in 2023. That's got to be some kind of record for money going up in smoke. This is 286,000 square feet, and it is 68% vacant. There's just nobody to rent these buildings. Now, 350 California Street was owned by Union Bank. Union Bank was bought out a few years ago by U.S. Bancorp. This building doesn't have any mortgage. It's not held in pensions. This building is sitting as an asset on the balance sheet of U.S. Bancorp. Well, that asset is now only worth $60 million when it used to be on their balance sheet for $250 million. Now, remember, a bank's assets is what they use to offset the bank's liabilities. The bank's liabilities, if you're a U.S. Bancorp customer, that's your money. So U.S. Bancorp took your money, bought this building with it, but don't worry, our financial system is strong and resilient. Now that's 350 California Street. Let's walk a few blocks over to 550 California Street. Now this building was originally listed last summer, and the whisper price, what they were hoping to get for it, was about $165 million. Well, the bids came in and it was slightly below that $165 million. Apparently the best bid they got for this building, $39 million. And this building is owned by none other than America's most hated bank, Wells Fargo, who coincidentally just paid a $1 billion settlement today for that whole scandalous accounts thing that went on back in 2016. Well, again, when this building sells and they take a loss of somewhere around $100 million on this building, that's going to be a hit to Wells Fargo's balance sheet. This is one of the assets that offsets your money in Wells Fargo if you're a Wells Fargo customer, which I can't imagine why anybody would still be a Wells Fargo customer at this point. But assuming there are still Wells Fargo customers out there, this is part of what was bought with your money. Well, they lost millions on this building. Again, our financial system is strong. Our banks are well capitalized and resilient and all that Janet Yellen stuff. I'm sure your money is perfectly safe in Wells Fargo, assuming you even know you have an account with Wells Fargo. And don't worry, folks, it's not just San Francisco. Check it out in Bloomberg. Chicago's empty office towers threaten its future as a major financial hub. Or this one, a bleak outlook for Manhattan's office space may signal a bigger problem. This is not just a San Francisco problem. San Francisco is being hit particularly hard by this crisis because California, but this is not just a San Francisco or not just a California or a West Coast thing. This is going to affect every major metropolitan area in the country. We just don't need this much office space. Not when you can do the office job from home. And no matter what these mayors say, no matter what Jamie Dimon says, companies that force their employees back to work to do a job that can be done at home, they're going to lose employees. And so they'll be forced to offer remote work if they want to retain the best talent. The companies that don't do that are going to go out of business. So there's just no sign that this trend is going to reverse anytime soon. So as my buddy Johnny Bravo would say, cue the fire, because there is a fire sale going on in San Francisco and because these buildings would probably be worth more if they were actually on fire right now. Till next time, live small and dream big.